Did you know that the child tax credit could put $2,000 per child back in your pocket this year? That's right. This credit isn't just a tax break, it's a financial game changer for families just like yours. And here's the thing, so many people out here are missing out on this deduction and credit, and it's because they don't understand the rules. So in this video, I'm going to be breaking down and making sure that you understand the rules and do not miss out on this amazing credit. I'm going to be breaking down everything that you need to know for the 2025 child tax credit, from people who qualify, how to be able to claim it, and how to also be able to avoid common mistakes that can literally cost you thousands if you are not aware. So make sure you stick around, because this probably could be the most valuable couple of minutes here that you have to spend as relates to being able to learn about the child tax credit. So let's go ahead and talk about and break down exactly what is the child tax credit. So to define the child tax credit, also known as CTC, is a federal tax benefit designed to support families and guardians of dependent children. And it's worth up to $2,000 per child under the age of 17 years old for 2025, with 1,700 that is going to be considered refundable. All right, so just to give you a little context on the history as it relates to this, so the CTC actually originated back in 1997 under the Taxpayer Relief Act, and in 2017, the Tax Cuts and Jobs Act doubled the credit to 2,000 and it raised the income phase out thresholds. And we're going to talk more about that. And there's been some recent expansions during COVID. If you remember, it was temporarily increased, but it has since to return back to those pre-2021 levels. So the purpose of this credit, it was designed to be able to help offset the cost of raising children. So it encourages financial stability for families and it provides some support for people who have children. And that's one of the reasons why this is so beneficial, especially if you have children and they continue to increase it, and they potentially could be increasing it in future years. So let's talk about this just to give you a couple examples here. So as it relates to the child tax credit, there is a non-refundable portion and there's a refundable portion. All right. So let's say, for instance, like I mentioned, the $2,000 that is available for a child tax credit, 2,000 is going to be divided into two ways. Okay, so let me go ahead and share my screen and share with you exactly how it's going to be divided, just so you're able to understand and follow along here. So let me go ahead and share this so you can see this. All right, so let's go ahead and break down. So let's talk about we have the child tax credit 2025. So like I mentioned, this year it's going to be $2,000 per child, and there's ways that it's going to be broken up. So you got 300 here that is going to be part of this 2,000, and that is only going to, this is going to be the non-refundable portion. Okay, so I mentioned that there's a refundable portion and there's a non-refundable portion. Now up to 17,000 or 1,700 is going to be considered refundable. All right. So the great thing about this refundable portion is if you owe less in taxes, then you're going to be able to get a credit for this. And that's the power of being able to utilize this. All right. So breaking down some eligibility requirements to be able to qualify for this as it relates to the child tax credit. So there's a couple of things that you have to be aware of in order to be able to qualify. So how can you qualify? Let's break that down. So the first part is going to be based on age. Okay. So it relates to children under the age of 17 as of December 31st, 2025 of this year. All right. So we're talking about this year. The next thing that they're going to be looking at is the relationship. What do I mean by relationship? So as it relates to relationship, there's different types of relationships that you can have with the child. So a couple of requirements here that you want to be aware of is they have to be biological. Is going to be one of the types of relationships. It could be a stepchild. It can be a foster child. It can be a sibling or their descendant. Okay, so those are the requirements there as it relates to relationship. Then you have citizenship. All right, so that's going to be another important one to be aware of. So this individual, this child must be a U.S. citizen in order for you to be able to go ahead and claim this tax credit. So that's going to be key. National, or they could also be what's called a resident alien with a valid social security number. So that's going to be the next piece here. Next, they also have to have residency. All right, so it's based on the residency as well. So this child must have lived with the taxpayer for over half of the year. All right, so that's going to be another important component of it. Then you have support. All right, so the support piece is did not provide more than half of their own. I'm going to underline own financial support. So what does that mean? So that means that the child could have not been able to provide support for themselves. Okay, so you need to be, as the parents, as the person, as a taxpayer that's going to be able to claim this, you want to make sure that you provide more than half of their support during the year. All right, so that's going to be really key in order for that child to be able to be claimed to go ahead and file for the child tax credit. All right, so as I mentioned, there's going to be some income phase outs as it relates to this. So what does that mean? So essentially what that means is that depending on how much money you make, it's going to allow you to be able to get the whole credit, or it's going to allow you to be able to get part of the credit, right? And as you make more money, it continues to phase out. So essentially the credit reduces by 50 for every $1,000 above these thresholds. So what are the thresholds that are related to this? Okay, so there's going to be different ones depending on your filing status. So for instance, if you are considered married filing jointly, all right, so that phase out for this is going to be 400,000. Then if you are the other filers, so single, head of household, etc., then that phase out is going to be 200,000. All right, so that's how that works. So just to give you some examples here to help you understand this even further, to make it make more sense here. So let's say, for instance, in this particular scenario, let's say you are a single parent. Okay, so let's say you're a single parent and you're earning 180,000. So let's say, I'll say example. So we're talking about a single parent here. And let's say you're earning 180,000 annually with 2 kids. And now you're going to be eligible in this scenario for the full $4,000 credit, right? $2,000 per kid. So you're able to qualify for the full 2,000. But let's say, for instance, on the other hand, let's say you happen to make 220,000 per year. So what happens there? So your credit is actually going to be reduced by your income, because your income is over this $200,000 amount that I mentioned, right? So as you can see here, it's over 20,000. That is above the threshold. So again, it's going to be reduced by 1,000 for reduced by 50 for every 1,000 above the threshold. All right, so that is going to be really, really important to understand here, right? So that is going to impact how much you're going to be able to get. And that's why Again, if you are a higher income earner, you may not be necessarily able to qualify for all of it. All right. So we have the refundable amount. Okay. So the refundable amount, like I said, is what's going to allow you to be able to get a tax refund. All right. So let's talk more about the refundable amount. So, like I said, the refundable amount is going to be that 1,700. And then the income thresholds remain the same. So there's no change to the phase out limits compared to 2024. So that is that the expiration of the current levels in 2026 is probably going to be expired if there's not any kind of changes politically as it relates to this, and the credits are going to go back to how they were pre 2017 with a maximum of 1,000. Okay, so hopefully they're able to go ahead and put in place and increase this, and chances are they probably will due to inflation, but more to come on that. It's not official, but that is just something for you to be aware of, right? Lower phase out thresholds as well can be brought back. So, like I said before, well, currently right now, what we have is 200,000 for filers and 400,000 for married filing jointly. But if we go back to the pre 2017, this is going to be 75,000 and this is going to be 110,000. So there are a couple of updates that we have to keep on lookout for. So there's probably going to be some proposals to be on the lookout. So you just want to make sure that you are aware and understand what is going on. So here is how to make sure that you file it and make sure that you are how to file for CTC. Okay, so here's a couple of things that you need to be aware of to be able to file for the CTC. Number one, you want to make sure that you use Form 1040. That's going to be number one. You want to, when you go ahead and file Form 1040, you want to file your tax return and attach Schedule 8812. Okay. So what do you want to include in this schedule? So here's what you need to include when you're going ahead and filing for this child tax credit. So you want to make sure that you put the dependent's social security number on there, put it for all of them. You want to make sure that you have proof of residency. All right, so you can go ahead and include school records, medical bills, as well. So let's talk about some common pitfalls, because I want to make sure that you are not going to fall into this, and making sure that you are in the best position possible to be successful as it relates to this. Okay, so here is what commonly happens when people do not qualify for it. So they fail to provide social security number. So that is a basic one. They end up misreporting income thresholds. So they don't necessarily share the right amount of income that they have. So that is some common reasons why people end up messing this up, right? So you can go ahead and use tax software to be able to do this. And with that tax software, it's going to do it automatically. So most of them should do it automatically. So you don't have to necessarily put as much work in to be able to do this. All right. So that's going to be the positive thing of it. And also they make it really simple, and they even calculate the refundable portion for you, which is great. So next, you want to understand when to file. So when do you have to file this? When's the deadline? When can you start filing for this? So officially, the IRS starts accepting tax returns mid-January. All right, so that's when they do it. And possibly when it comes to the actual refund, if you're claiming the refundable portion, if claiming refundable portion, then just expect that there could be some delays, and you could probably have to wait till mid-February. Okay, so that is just something to be aware of as it relates to being able to go ahead and claim this and be able to get this tax credit. All right, so another thing to keep in mind as it relates to this is it also depends on your state as well. So, these are some of the things as it relates on the federal level, but then on the state level, there is some different programs that you need to be aware of, right? So state programs that you need to be aware of. So you got states like California. You also have New York. You also have Colorado, for instance, that has their own programs as it relates to this. Okay. So you can be able to get a little bit more, a little bit less, depending on the state that you're in. Right. So that's going to be really key to be able to understand. So for instance, it's going to be based on your income level as well. So for instance, like California's Young Child Tax Credit offers an additional $1,000 for children under the age of 6 for low income families, right? So that is a benefit here that you need to be aware of, right? So example, like I said, is California offers additional 1,000 for children under 6. So again, you want to make sure that you are being up to date and making sure that you are being aware of these different rules as relates to your state. So a couple of common myths and misconceptions as relates to this. So I just want to make sure I put this out there so you all know. So some people generally ask during this time of year, do I qualify if I have no income? And the answer is yes. So even if you don't have any income, you are still able to qualify for it if you meet other requirements, the ones I mentioned up here. Like I said, you're going to want to make sure that these qualify, and if so, then you're going to be able to get that. Another common question here that we get is, can I claim the credit for non-biological children? As I mentioned, yes, you can if they meet the other requirements, the relationship requirements. As I mentioned, there's foster, sibling, there's descendant, and also the residency as well, and the other requirements here that we have, right? Another question is, what happens if I claim the credit in error? All right. So if you do claim it, the IRS may deny your credit and they might impose fines and penalties and require you to pay it back. So you just want to make sure you are aware of that. Another question that we have here is, can I claim the credit for a newborn? The answer is yes, absolutely. As long as they were born during the year, you're able to go ahead and claim them for the child tax credit, right? So a couple ways to be able to maximize this is going to be really key here as it relates to being able to get even more of the credit. So you just want to make sure the way to do that is, number one, you want to review your modified adjusted gross income. And when I say modified adjusted gross income, AGI, that's going to include other types of taxes in there, things in there such as untaxed foreign income, non-taxable social security benefits, and tax-exempt interest. All right. So for many people, modified adjusted gross income is going to be pretty much the same. So just be aware of that. You also want to use tax planning strategies to stay below the phase out thresholds. That's going to be important. Making sure that you claim all the eligible dependents that you have. You also want to ensure you are listing all qualifying children on your return to make sure that you are making sure that you're maximizing the benefits here. And then you want to combine them with other credits, right? So there's other credits that are out there. Chances are, if you qualify for the child tax credit, you could also qualify for the earned income tax credit as well. So just want to make sure that you're combining all of those different things here. So what's next? So what can we expect coming up as it relates to child tax credit? So you just want to make sure that you be on the lookout for any changes as it relates to legislation. So there's going to be some changes, I'm sure. Again, a lot of these numbers are going to phase out, or is scheduled to be phased out next year. So they may go ahead and extend it. So you just want to make sure that you are on top of that. Making sure that you are looking out for any cuts if they happen to cut it. Again, I don't think they're going to cut it, but again, it's possible. So you just want to make sure that you're doing that. Again, making sure that you are being involved as it relates to pushing more for this if this impacts you. And then you just, again, want to make sure that you stay informed and you're advocating for these policies. That's going to be really, really powerful for you, right? So that pretty much wraps it up as it relates to child tax credit for 2025. If you found this helpful and it helped you understand the process better, make sure you go ahead and give this a thumbs up, share it with someone who could benefit from it. Do not forget to subscribe for more tax tips and financial insights. And make sure you go ahead, drop some comments if you have any more questions. I would love to be able to help you out. And I'll see you in the next video. Take care.